All right. Hello again, everyone. It's Dima Khoury with Compass in Berlin Games. So I'm back to bring you more information on real estate market in San Francisco for the past week and in general what's happening and how the number are doing for quarter three of this year and comparing it to previous year, year over year. So to start with, I always start with the interest rates. We're still at historic low interest rates, which means the purchase power of buyers is up to the roof. It's really high. And especially that the property values are very stable in San Francisco. Some property types are slightly going down. So if you are a buyer thinking of buying in the next 6 months to 1 year, this is really a great time to reconsider your timelines and go on the market and check what kind of opportunities you will find. There are some really nice properties on the market that are selling slightly lower than the market price. So it's a great time for you as buyers, and for the sellers there are a good percentage of properties that are selling at the reasonable market price, and we definitely need to take into consideration the lower activity in the market in specifically in San Francisco. So, so let me also share more information about how the real estate market and the mortgage industry doing in the U.S. in general. So let me share my screen with you. All right. So the first slide shows the home prices appreciation. So in general, in the U.S., the majorities are projecting home price to appreciate, to continue to appreciate in the next 12 months. So that's a 12 months forecast. So where Zillow is at 7%, Zelman is at 5.9%, Freddie Mac at 5.5%, and then if we put this, like if we compare their current projections to their initial projections at first when everything started with like original pandemic forecast, CoreLogic was at very low, like they were at minus 6.6%, and currently they're at positive 0.2%. Zillow are expecting property values 7% to increase, while they were expecting property depreciation minus 3% initially. And the home price expectation survey, it came at minus 3%, and currently they're at 3.7%. And Freddie Mac 2.3% they were expecting, and now they're expecting 5.5. So Freddie Mac and Zelman were still expecting property values to appreciate, yet not at the same level as they do right now. So they are at 5.5 and 5.9%. Now, again, builders' confidence is the highest ever recorded. And this is based on the National Association of Home Builders. And the way they do it is they rate the market conditions for the sale of new homes at the present time and in the next 6 months, as well as the traffic of prospective buyers of new homes. So they're at 83 points. Now, again, I'm bringing these charts back because I have buyers who are asking me if there will be any foreclosure market, big foreclosure market or not. And some of them are taking this seriously and they are really waiting for a foreclosure market. So my first answer is no one knows what's going to happen. So all the numbers that we have right now are indicating that this is not going to happen. This is not the future reality. This is not how it looks like. But of course, again, no one knows. Things can shift in a second. So, but look, that's why I wanted to present you the current information that proves that this is not going to happen. So looking at the forbearance percentages, so we can see that the percentage is decreasing from May until October. So we're at 6.3% now, and down from 8.4 or 8.5% back in May. And now looking at the number of families who were granted forbearance. So we originally had 5.2 or almost 5.3 million. So what happened with these families? So 2.8 million of the 5.3 million, they did forbearance extension. Now, 41% of the 5.2 or 5.3, 1.8 million, they removed while performing. So they already removed the forbearance. 363,000, they paid off the mortgage. And we have also 267,000 who are expired and delinquent in loss mitigation, and 54,000 expired delinquent. So the question is, again, whether there will be foreclosure market or not. Again, no one knows, but the numbers shows that it's highly unlikely to happen. Again, 41% are out, they're done. Now, the question is what's going to happen with the 2.8 million in the coming few months? Now, another supporting piece of information, which is really convincing, that the distribution of loans in active forbearance by current combined loan to value. So 62% of the families who are in forbearance, they have 70% equity or less. So this means, like, how does this translate on the ground? So if the market drops, let's take the average of the 70%, so from zero, so let's say 35% equity, the average. So the market has to drop 35% down in order for these families to really be hurt and be in foreclosure, and not even all of them. And this is how we look at it. And like, it's so this is a really good number, and probably this is completely different than what happened in 2008. So we can see that the equity amounts in the homes are way higher than they were in 2008, and that's a huge difference. And that's hopefully that answers the questions whether there will be foreclosure market or not. It's going to be a normal market, and there might be some foreclosure deals, but it's not going to be a big one. Now, so again, 91% of at least 11% equity, which is huge. So now let's dig deeper into what's happening in San Francisco market and the previous week, and how many properties sold or came on the market. So the total number of properties that came on the market are 161, and 100 of them are condominiums. So we can see that more activity is happening in the condominium market. And the number of properties that went in contract or are currently pending as of October 24th are 206 properties, and 115 of them are condominiums. And the properties that closed escrow or sold are 109, and 57 of them are condominiums. Now, the properties that sold there, it's definitely higher. It's slightly higher than last week. But if we remember, last week we were 20% above the previous week. So we're still at a very strong and high activity, so which is great, especially during this time of the year. Now, the number of properties that came off market, this is a higher number. So we're 30% higher in terms of number of properties that came off market in comparison to previous weeks. So the total number is 85 properties, and 60 of them are condominiums. Now, the absorption rate for the single family home is 1.55, which means that we need a month and almost 16 days or 16 days and a half to sell the current properties that are on the market. This is still a very low number. It shows it is a seller's market. And for the condo market, we are at 3.36, which is higher than the single family homes, yet it is still a seller's market. And the reason probably why it's still a seller's market, we go back to the percentage of equity that the homeowners have in their properties. So it is high. So they can afford not to sell the property. They can drop the price slightly, but they don't need to go in foreclosure. They're not stuck. So we don't see depressed or distressed sellers on the market. So we're at 3 months and almost 11 days. So this is still a seller's market. Anything below 4 is a seller's market. Anything above 6 is a buyer's market. Now, let me again share my screen and show you some statistics on San Francisco market in terms of the number of the percentage of listings that are accepting offers, and that's per quarter 1 to 3 starting from 2017. So we can see that for the single family homes, we in quarter 3 we did experience more properties that are selling and going in contract, while early in October, in quarter 2, it dropped tremendously from in comparison to quarter 4. So we're still at not the rate of last year, yet we're definitely higher um, than the beginning of this year, which is great. Now the condominium market, it did drop obviously in quarter 2. Now we're definitely higher in quarter 3, and which shows in the numbers that we have. And I just gave you, and hopefully it will continue to go up the next few months and early next year. Now, looking at properties accepting offers only in quarter 3, and that's for the condo market. So the average for all San Francisco, it's 30% of the listings are accepting offers. The median price is at 1.25 million. Now, the highest number of properties that are accepting offers, or the neighborhoods that are accepting offers at the median home sale price, is 1.5 million. It's 47% of the properties hitting the market are taking offers, and that's in this neighborhood, Noe Valley, Eureka. And then the lowest is at South Beach, Soma, Mission Bay. So it's at 18% of the properties are receiving offers, and the median sale price is at $1,090,000. Now, looking at quarter 3 for the housing, so we have the average for the percentage for all San Francisco, it's 50%, which is higher than the condo. The condo was 30%, now we're at 50%. The highest neighborhood that is taking offers is Sunset, Parkside, Golden Gate Heights, and the median sale price is 1.5 million. And the lowest is Pacific Heights, and it's 28% of the properties that are going on the market are taking offers, and the median sale price is at 4.2 million, which is interesting. Now, looking at quarter 3 in terms of median sale price and comparing it year over year, so quarter 3 2020 versus quarter 3 2019. So we can see that for the condominiums, 1 bedroom and 2 bedrooms, the median sale price has dropped minus 6.6% and 6.5%. For the single family homes, for the 2 bedrooms is 1% increase. And the most popular properties that are selling currently in San Francisco are 3 bedrooms, and they're selling at 8% higher than previous years in terms of median home sale price. And we can see that the 4 bedrooms or larger, they're selling at minus 1%, which I would say it's almost stable. Like the 4 bedrooms and 2 bedrooms are slightly stable and kindly similar to last year. So this is the San Francisco real estate market activity. And I hope this was helpful for you. This was informative for you if you're a buyer on the sideline, not sure whether to buy or not to buy. It's such a great market. And for the seller, this is also more detailed information on your neighborhood. And if you need extra more information about your type of property, whether to sell in today's market or no, and if yes, how to sell it, please feel free to reach out. I'll be more than happy to answer any of your questions. I'll leave you now to celebrate Halloween. Happy Saturday, and please be safe.